general terms, unless you find the prices of a great company really offensive, if you feel you've identified it, and by definition, a great company is one that's going to remain great for 30 years. If it's going to be a great company for 3 years, it ain't a great company. I mean, so you really want to go along with the idea of something that if you were going to take a trip for 20 years, you wouldn't feel bad leaving the money in with no orders with your broker and no power of attorney or anything, and you just go on the trip and you come back and it's going to be a terribly strong company. I think it's better just to own them. I mean, we could attempt to buy and sell some of the things that we own that we think are fine businesses, but they're too hard to find. We found See's Candy in 1972, where we find here and there we get the opportunity to do something, but they're too hard to find. So to sit there and hope that you buy them in the throes of some panic, that you sort of take the attitude of a mortician, waiting for a flu epidemic or something. I mean, I'm not sure will be a great technique. That's a lot to count on. And, if you start with the Dow at X and you think it's too high, when it goes to 90% of X, do you buy? Well, if it does and it goes to 50% of X, it gets, you never get the benefit of those extremes anyway, unless you just come into some accidental sum of money at some time. So I think the main thing to do is find wonderful businesses. We've had our share of flu epidemics, but you don't want to spend your life waiting around for it. It's a temperamental quality, not an intellectual quality. You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha. But you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Because this is not a business where you take polls. It's a business where you think. And Ben Graham would say that you're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning are right. By far the best investment you can make in yourself. For example, communication skills. I tell those students that they're going to graduate schools and business and they're learning all these complicated formulas and all that. If they just learn to communicate better, both in writing and in person, they increase their value at least 50%. If you can't communicate, somebody says, it's like winking at a girl in the dark. Nothing happens, basically. And you have to be able to get forth your ideas. And that's relatively easy. I did it myself with the Dale Carnegie course. Some people wish I'd taken a shorter course now in terms of my talking later on. But it's just hugely important. And if you invest in yourself, nobody can take it away from you. If I gave you a car and it'd be the only car you get the rest of your life, you take care of it like you can't believe it. And you scratch it, fix that moment, you read the owner's manual, you keep a garage, do all these things, and you get exactly one mind and one body in this world. And you can't start taking care of it when you're 50. By that time, you'll have rusted out if you haven't done anything. So you should really make sure that you just remember that you just got one mind and body to get through life with and to do the most with it. We think the best way to minimize risk is to think. And the idea that you have, you say, I've got 60% in stocks and 40% in bonds, and then have a big announcement. Now we're moving it to 65-35 as some strategists or whatever they call them in Wall Street. That has to be pure nonsense. I mean, 60-40 or 65-30, it just doesn't make any sense. What you ought to do is have your default position is always short-term instruments, and whenever you see anything intelligent to do, you should do it, and you shouldn't be trying to match up with some goal like that. I found it entertaining. I was just reading yesterday an article, I think it was, about the two fellows at Google and all of the problems they're going to have because they're each going to get a few $1 billion. I mean, I want to send a sympathy card. I almost went down to Hallmark store because this article went on. They've got this terrible problem, that terrible problem. They're going to need lawyers and they're going to need financial advisors. They don't need anybody. Those guys are smarter than the people that are coming to them, and they do not have a big problem, and they're very capable of thinking it through themselves. The people that have the problem are the people who want to sell their services to them and are going to try to convince them that they have a problem. But so much of what you see when you talk about asset allocation, it's just merchandising. It's a way to make you think that if you don't know how to determine whether it should be 60-40 or 65-35, that you need these people. You don't need them at all. And most of the professionals tell you you're going to get in great trouble unless you listen to them and sign up for their services. They're good at selling, but it's what my former brother-in-law that worked at the stockyards used to say, was that people would bring in cattle or something, and I'd say to them, how do you get the farmer to employ you to sell the Swift or Armor or cut a hay instead of the guy right next to you? I mean, it's a cow is a cow, and farmer's going to buy it the same way. And he gave me this disgusted look, and he said, Warren, it's not how you sell them, it's how you tell them. Well, there's a lot of that in Wall Street.
Yeah, people have always had this craving to know the future. The king used to hire the magician or the forecaster, and he'd look in sheep guts or something for an answer as to how to handle the next war. And so there's always been a market for people who purported to know the future based on their expertise. And there's a lot of that still going on. It's just as crazy is when the king was hiring the forecaster who looked at the sheep guts. And people have an economic incentive to sell some nostrum. It can be sold over and over and over again. The really interesting figures are when you combine the underperformance of the market, say by the mutual fund industry, which is probably a couple of points per annum, that understates it. Now, if you take all of the investors in the mutual funds who are constantly whipsawing from one fund to another by a bunch of brokers who want commissions, now you take a subnormal performance and it goes down another 3 or 4 percentage points due to the shuffling of the mutual fund investments. So the poor guy in the general public is getting a terrible result from contacting the experts. And these guys are heading the scout troop and the community chest drive and are locally reputable people. I think it's disgusting. It's much better to make a living by being part of a system that delivers value to the people who are buying the product. But nobody refrains from creating gambling casinos or something on my theory. If it'll work to make money, well, we tend to do it in this country.
Desire of people to gamble, and they gamble in stocks, incidentally, too. Day trading, I would say, very often came very close to gambling as defined. People like to gamble. No, I mean, it's if the Super Bowl is on, or even, better yet, if a terribly boring football game is on, but you don't have anything to do, and you're sitting there with somebody else, you're probably going to enjoy the game more if you bet a few bucks on it one way or the other. The human propensity to gamble is huge. Now, when it was legalized only pretty much in Nevada, you had to go to some distance or break some laws to do any serious gambling. But as the states learned, what a great source of revenue it was, they gradually made it easier and easier and easier for people to gamble. And believe me, the easier it's made, the more people will gamble. My children are here, and 40 years ago, I bought a slot machine and I put it up on our 3rd floor. And I could give my kids any allowance they wanted as long as it was in dimes. I mean, I had it all back by nightfall. I thought it would be a good lesson for them. And now, they weren't going to Las Vegas to do it, but believe me, when I was on the 3rd floor, they could find it, and my payout ratio was terrible too, but that's the kind of father I was. Gambling, people are always going to want to do it. And for that reason, I particularly think that to quite an extent, gambling is a tax on ignorance. You want to tax the ignorant, people who will do things with the odds against them. You just put it in, and guys like me don't have to pay taxes. I find it kind of socially revolting when a government preys on the weaknesses of its citizenry rather than acts to serve them. When people said cash is king a year ago, I mean, that's crazy. I mean, cash wasn't producing anything, and it was sure to go down in value over time. And then you always want to be sure you have enough. I mean, it's like oxygen. You want to be sure it's around, but you don't need to have excessive amounts of it around.